Hey there, everyone! Welcome back to our channel, where we help you navigate the exciting world of finance and investments. If you're new here, make sure to hit that subscribe button to stay updated with our latest videos. Today, we're diving into a topic that many aspiring investors grapple with: how do I finance an investment property? Whether you're looking to buy your first rental property or you're a seasoned investor seeking to expand your portfolio, understanding your financing options is crucial. So, let's get started. But before we jump into the nitty-gritty, let me ask you this: have you ever wondered what the best way to finance an investment property is? Is it through traditional loans, private lenders, or perhaps even creative financing? Well, by the end of this video, you'll have a clearer picture of how to fund your investment journey. First things first, let's explore the most common method: traditional mortgages. If you're thinking of purchasing a residential rental property, a conventional mortgage is often the go-to option. Imagine you find a charming 3-bedroom house in a growing neighborhood for $300,000. If you decide to put down the standard 20%, that's $60,000 up front. The remaining $240,000 would be financed through a mortgage, which you would pay back over 15 to 30 years, typically at an interest rate between 3% and 5%, though rates can vary. This method is reliable, and the interest you pay may be tax deductible. But remember, lenders will look at your credit score, debt-to-income ratio, and overall financial health before approving your mortgage. So, it's essential to have your finances in order. According to recent data, about 70% of real estate investors finance their properties through traditional mortgages. This shows that it's a widely accepted and trusted method. But let's explore some alternatives if traditional financing doesn't fit your needs. Next up is the option of using private money lenders. Private lenders can be individuals or companies that lend money for investment purposes, often with more flexible terms than traditional banks. Let's say you meet someone at a networking event who has extra cash sitting in their savings account. Perhaps they're looking for a better return on their investment. You could propose a deal where they lend you money at a competitive interest rate, perhaps between 6% and 10%, which is still better than many credit cards or personal loans. The terms can be negotiated directly, which provides more flexibility. However, remember that this route can come with higher risks, especially if you don't have a solid repayment plan. Make sure to have everything documented to protect both parties. Another popular option is using a home equity line of credit, or HELOC. If you already own a home and have built up some equity, you can tap into that to finance your investment property. Let's say your current home is worth $400,000 and you owe $200,000 on your mortgage. This means you have $200,000 in equity. A bank might allow you to borrow up to 80% of that equity, so $160,000. You could use this money to make a down payment on your new investment property. According to a survey by the National Association of Realtors, nearly 25% of first-time homebuyers used a HELOC for their purchase, demonstrating its effectiveness. Now, let's not forget about creative financing options. These can include seller financing, where the seller essentially becomes the lender, or lease options, where you lease the property with an option to buy later. Imagine you're interested in a property worth $250,000, but the seller is motivated to sell quickly. You could negotiate a deal where you make monthly payments directly to the seller, bypassing the bank altogether. This arrangement can benefit both parties, as the seller receives consistent payments and you get into the property with potentially less upfront cash. As you can see, financing an investment property doesn't have to be a daunting task. Whether you choose traditional mortgages, private lenders, HELOCs, or creative financing options, the key is understanding what fits your financial situation best. Remember, each option carries its own set of advantages and risks, so it's crucial to do your research and, if possible, consult a financial advisor. If you found this video helpful, please give it a thumbs up and share it with your friends who might be interested in investing. And don't forget to leave a comment below telling us what financing method you're considering for your next investment property. We love hearing from you. Thanks for watching, and until next time, happy investing!